Well, welcome, ladies and gentlemen, to Access All Agents, your backstage pass to the Newcastle property industry. And I'll tell you what, I'm really looking forward to this one today. As always, we have my compatriot, my co-worker at Capital Property Newcastle, Tom Haigh. G'day, Tom.
Great to be with you, Rosie.
Thanks very much, mate. Good to see you too. And commercial maestro, Nick Lane. Hello, Nick.
Oh, mate, that's a big rap. Hey, boys, how are you?
I'm great, thanks. So, Nick, I'll let you explain a little bit about who you are and what you do.
Sure. Look, I've been a licensed real estate agent for 18 years, and I've been in the property industry for 25 years, starting off initially as a valuer. I'm the Director of Sales and Leasing here at Knight Frank in Newcastle. For those that mightn't be familiar, Knight Frank is the world's largest privately owned global real estate company. And here in the office, we've got a fully staffed operation which covers the whole range of services such as agency, the transactions, sales and leasing, property management and valuation and consultancy. And I look after the sales and leasing team together with my colleagues.
Nick, one thing I've always liked about you is that you're a calm man, you're a steady hand, and you're very, very experienced. So during these tumultuous times, these times of uncertainty, as the word's been thrown around ad nauseum, you are definitely my go-to guy to sort of map the way forward. So give us a little bit of an insight into what you're seeing based on all the experience you've had over many, many years of these, crises, financial crisis being the GFC, different recessions, and compare where we are now to those, and maybe map out a little bit of a chart ahead.
Yeah, sure. Oh, interesting times indeed. Probably if I back it up a little and we have a look at our quarter four results from 2019, so the end of the year effectively of 2019, we had a really strong quarter. So lots of transactions, good inquiry and good in sentiment. Sentiment, I beg your pardon, from both buyers, sellers, and potential tenants, and our numbers were really good. So then starting in January and February, which can sometimes be a little bit of a quieter sort of period for commercial real estate, the year really kicked off with a bang, didn't miss a beat at all. So again, plenty to do over January and February. Lots of transactions underway, phones ringing, and then of course, COVID-19 unfolds over March and April. And I think everyone in the real estate game, whether it's commercial or residential, experienced an enormous slowdown where businesses and homeowners out there and potential buyers just stopped and paused. What is happening? What's going on? What does the future look like? And when there's uncertainty, people tend to pause and sit on their hands and not do anything. So that was our experience over March and April, and I think that was an industry-wide problem for all commercial agents. There was just a fundamental lack of confidence to be able to see past the next sort of week or two, and as businesses were sort of shut down and we all returned to our homes, it was difficult to predict what the future would be. Fortunately, probably in from May onwards, as gradually lockdown restrictions were eased, now we see that pubs and clubs have reopened and restaurants and cafes. I see today gymnasiums and fitness centres will be open from the 13th of June. So thankfully, somewhat of a return to normal, albeit a slow and gradual build-up. And I think that has got the phone ringing again and has brought a little bit of confidence back to the market. And we've found ourselves picking up, and the inquiry is a lot better than it has been. So a pretty tough time over the last couple of months. But I think that everyone needs to keep in mind with commercial property particularly, it's a long-term play. So whatever may be happening in the next handful of months or even over the next 6 months, if you're looking to invest in commercial property, you should be looking over a sort of 5 to sort of 10-year horizon. And if you do that, look, the fundamentals of Newcastle and the CBD and our Hunter region are really, really strong.
Absolutely. I couldn't agree more about it being a long-term play. And, I think that's something we all need to keep in mind with any sort of investment, be it in the stock market, be it in the property, residential or commercial. So you've definitely seen the ups and downs of the world. And, for every up, there is a down. So you have to be prepared for both sides of the coin, So it's great to have someone experienced like yourself, an advisor out there who can, like I said, help you navigate through those treacherous waters. Someone else who's a trusted advisor is Tom Haigh from Capital Property Newcastle. He is a trusted buyer's advisor. And Tom, what are you seeing out there? What sort of sentiment are you getting from your clients?
Yeah, I guess it's certainly not dissimilar to a couple of things that Nick's run through for us already, Craig. It's really a case of a lot of people sitting back, sitting on their hands, not doing too much at all. But the point that I think you made around the cycles is exactly that. So where we're sitting at the moment is we've just come off a really bumper year for commercial property. I remember having numerous conversations with Nick when we were hunting for different investment opportunities for our clients, for our investors, and there was just no stock around. 2019 was a big year for commercial property. We saw yields coming right down as a result of investors from other markets chasing yield and chasing returns. So I think with every up, there's obviously a down as well, and we're probably experiencing that at the moment. The real opportunities in commercial exist for those buyers that can come together, that can pull some funds and can weather the storm. Ultimately, as Nick so rightly mentioned, it's a long-term play, a long-term investment. So if you're mindful of that, if you obviously invest for the long term, acknowledge that there are going to be some bumps on the road, commercial property still remains a great option for people that are hunting cash returns.
Yeah, absolutely. The great investor Warren Buffett says, when everyone else is selling, it's time to buy. When everyone else is buying, it's time to sell. Have you seen that sort of thing happen right now, Nick, in the commercial real estate world in Newcastle?
We haven't experienced any what you might call distressed sales, so insolvencies and mortgagee sales. And that's largely because I think the government responded quickly, and I think they responded appropriately with the likes of the JobKeeper program. And then you'll remember that there were rent deferment measures put in place for about 6 months for commercial tenants. And also the banks came to the party with mortgage deferments up to about 6 months or thereabouts. So there's been enough sort of, Band-Aids and sort of bandages applied quickly to sort of stop some of the hemorrhaging and just give everything a time to sort of settle and shake out a little bit. And thankfully, I think it's done its job, and we haven't experienced any distressed or forced sellers at this point. I suppose the interesting time will be come September or October, when a lot of those emergency measures are withdrawn, and then the whole economy has got to stand on its own 2 feet again. I'd like to think that Australia is well positioned to sort of sail through, but maybe not everyone will make it. Maybe we will see some insolvencies and some receivership matters start to come to the fore, and possibly some of those assets will be realised on. But for the time being, and I should say thankfully, we haven't experienced that.
Yeah, it's become almost a drinking game, predicting the future of real estate in Australia, both residential and commercial. Nick, maybe give us a bit of a insight into some of the fundamentals we should look at to bulletproof our investment, to bulletproof our own occupying status. If I'm wanting to really ride out the next pandemic, and they're so real now that I'm sure there's only one around the corner. If not a health pandemic, it'll be some sort of global downturn. How can I bulletproof the way forward?
Well, look, the fundamentals of commercial real estate investment just don't change. Up market, down market, flat market, good market, it doesn't make any difference at all if you stick to the fundamentals. And location is an old adage that's thrown around in the real estate industry. So definitely buying in the right location, close to services, close to transport, something with a bit of profile so that your tenants can be seen and it's got a bit of that visual presence. So that's location. But obviously buying a building that isn't so specialised that it can't be used by a range of different tenants. So if it's a commercial building for office space, make sure that the office space is reasonably generic. So the floor plans and the layouts are such that a whole range of tenants can use them. And if one tenant moves out, another tenant can easily move in. Sometimes when you buy highly specialised properties, they only appeal to such a narrow segment of the market that if a tenant was to move out or in really uncertain times unable to meet their lease obligations, then you might find that it's going to take you some time to find a new tenant and extended vacancy because it's a very highly specialised property and only suits a range of tenants. Then the fundamentals, again, if you were buying something that's already leased, don't change in terms of who is the tenant, when is the expiry, do they have options, what do the rent review patterns look like? Are they fixed annual increases or are they CPI? And fundamentally, what does the tenant do and what does their business look like? So if they're in a certain industry or sector, it's well worth having a look at how is that industry or sector performing. So if it's likely to experience some headwinds, like say if it was a gym or a cafe at a restaurant, for instance, which in recent months have been all but told to close, except for maybe selling some takeaway coffees, obviously they're going to be very, very highly impacted from a future pandemic. If the tenant was, say, a government agency or an ASX listed tenant where their cash flow and their ability to meet their lease obligations really isn't impacted, just life goes on, well, obviously that's a far more secure and steady investment and likely to ride out any of the rough times. And as I said, those fundamentals of doing your due diligence, buying in the right location, buying a flexible and versatile sort of property that can meet a lot of tenants' needs, and then looking specifically at what the tenant does. Doesn't matter what the market's doing. If you're investing for the long term, those fundamentals don't change.
Well, absolutely fantastic wrap up there, Nick. There's a couple of decades of experience in commercial real estate right there. And fortunately for all of us, we can just rewind this on YouTube and listen to all that again. That was absolutely stunning. So Tom Haigh, as an advisor for buyers out there, there could be some opportunities coming up. We don't know exactly what's happening. None of us have got a crystal ball. But as Nick mentioned, there's some fundamentals that we should take on board. How would you be advising as an investor to capitalize on this market over the next few months?
Yeah, I guess Nick absolutely hit the nail on the head there when he I guess spoke of the investment process and the scrutiny that you've got to place on I guess the underlying driver of value with commercial property, which is your tenant and your income. And ideally, Nick mentioned identifying properties with the potential for a diverse range of end uses. I'll never forget seeing one of the best properties I've ever come across in Newcastle in the East End. It came to market. This is this must have been 10 or 15 years ago now. And unfortunately for the owner, he bought it as an investment, and his single and only tenant was a internet cafe. Now, as we all know, with the introduction of Wi-Fi, almost overnight, unfortunately, the tenant in that particular instance went bust overnight. Now, this vendor didn't have a slush fund set aside. He didn't have a cash buffer to ride out that period between his tenant leaving and identifying the next possible tenant. The other issue he had in that case, of course, was it was a dedicated use for an internet cafe. So it really comes back to future-proofing your investment by making sure that there is flexibility in what you're investing in. Ideally, you've got income coming through from a range of tenants, a number of tenants, rather than relying on income from one single source. So again, just hedging your bets, managing the downside, and identifying properties that, as Nick probably said, the best piece of advice out of this whole interview today it's about location. Location will forever be a driver of value, whether it's commercial or residential. It's a really important thing and can't be overlooked. So follow Nick's advice, do your due diligence. As Rosie said, rewind this to probably about minute 11 when Nick was just absolutely rattling off some gold there for us. So thank you, Nick. And yeah, take your time.
Absolutely, Tom. Nick, we've, as you mentioned, we don't know what's going to be happening around September when, the JobKeeper finishes and a lot of the mortgage subsidies and pauses on those will come into play. We just don't know. But I think for anybody who is got a smart business brain, which is a lot of the people that are listening today, they're thinking about ways to take advantage of this disruption, ways to perhaps capitalize on the what's happening in the market. What are some of the specific opportunities that we should be looking for as an investor or an owner occupier?
Yeah, look, a lot of people have asked me, are there any hot buys, any bargain buys out there? And my answer was yes. 2009, there was some really good buying in Newcastle. So about a decade ago. I don't think there is in the CBD of Newcastle. There isn't anything as cheap property anymore. The city has evolved and grown to such a stage that all the cheap buys really were probably a decade ago. But look, commercial property is still going to be very, very sought after as an investment, because if you think about it, really, you've probably got three basic avenues of investment. You can put your money into cash in the bank, but clearly you get next to nothing for it. There's the share market, and as we've all seen over recent months, it's had a really wild ride. There's been an enormous amount of volatility there, and that's not for everybody. Or there's property, real estate, and then that comes down to residential property or commercial property. Now, with residential property, obviously, the risk of vacancy is obviously a lot lower because you've either got to buy your own home or you've got to rent a home. So the days on market in terms of vacancy can be a lot less with residential property, and you're speculating more on capital growth. The advantage of commercial property is effectively a higher yield, so a higher return on your investment. And as we've spoken today, look, there are some fundamentals that you need to come to terms with and understand before you invest in commercial property, but effectively will provide higher returns than residential property. And that's why it's still going to be very, very attractive for investors. Look, going forward into the future, getting back to our fundamentals, and I mostly work here in the CBD, looking for properties which, again, have a versatile layout and design, so they appeal to a great deal of tenants. But one of the most sought-after things here is parking. Parking's at an absolute premium in the city. It's very hard to procure. So if you're looking at commercial investments that particularly have good off-street parking, either in a basement or behind the building, they can be absolute gold, because when the tenant comes along and I start to show them around, one of the first questions is, does it come with any parking? How much parking does it have? And if you're able to offer some parking on the premises, you're going to be at a distinct advantage than those that do not have parking. We've found it in the past sometimes really difficult to lease properties that have no parking at all. There are good public transport options here in the CBD, but for some businesses, they have a specific need for their employees to drive to their place of work, and that just can't be avoided. So definitely anything that has parking is going to be a little nugget of gold into the future.
Absolutely. As you're saying that, Nick, I'm thinking, a couple of clients we've had for Capital Property Newcastle with Tom and myself, we're basically looking for a car park with the building attached. It was so hard to get parking in the CBD of Newcastle, which, a decade ago we would have laughed at that, just like we would have laughed at peak hour traffic. But, things change. The Newcastle is developing. And so, yeah, I couldn't agree more that the issue of parking is very, very important in Newcastle, because, hey, it's okay to say we can catch public transport to and from work, but some people need to go different places during the day. You know, they need to go visit other clients. They need to have deliveries. They need just to have that access. So that was some really good advice there. So absolutely really good session today, guys. I guess we probably want to get into some of the key takeaways now. Tom, how about you can wrap it up for our listeners out there, and what are the 5 things I should be doing over the next few months in regards to commercial property?
Well, that's a tough one there, Rosie. Thanks for putting me on the spot. I think number one is do your research. Nick said it so well today. You know, there's a lot that goes into investing in commercial property. It's not something that we'd recommend jumping into overnight. So do your research. Number 2 is invest for the long term. You know, and again, another great takeaway from Nick today. Number 3 would ultimately be understand what your investment strategy is going to be. If capital growth is your focus, commercial property may not be for you, but certainly if you are hunting for yield, if you are hunting for a return on the cash that you invest, as Nick so rightly said, you're not going to get it in the bank. The share market's obviously got a high level of volatility at the moment, so commercial property may be a good option. Number 4 is probably to do your homework and certainly don't be dragged in by the headlines. Obviously, headlines sell papers and sell ads, and you've got to be really cautious of taking advice based on the shock and awe approach that we're seeing out there today. So do some digging, understand what's really going on, have a conversation with people that are out there on the ground, like Nick, with those market insights. And number 5 would be probably most of all, remember that long-term location will see you through. So I think what we're experiencing at the moment is a lot of concern out there that commercial office buildings. Nick's obviously sitting in one of the best offices in Newcastle there at the Gateway. A lot of the concern is that everybody will be working from home and commercial property will lose all its value. Look at the different options to change or adapt your layout, your floor plan, the way that you're able to let the property. Because ultimately, if you can identify an alternate tenant, alternate use to your current strategy, it's a really great backup plan. Now, will we see the mass exit of businesses, of operations from commercial floor space? We'd have to say highly unlikely, based on the fact that the new normal is probably losing a little bit of its shine. I know personally, I'm set up at home in the spare bedroom that my mother-in-law will soon occupy when she can travel interstate from Victoria. So working from home may not necessarily be the long-term solution that we all thought it would be. So again, look at managing your downside by having something that is truly flexible.
I'd add one further point there and talk to your bank. I mean, one of the most important parties in this whole equation is finance, presuming you need finance. And look, the funding landscape has changed there a bit, I think, for the banks, given all the disruption that's taken place. So be sure that when you've done your research, you find the property that you like and you think this is the one. Don't then scramble around looking for your finance. Get on the front foot, talk to your bank, understand what you can borrow, understand what their lending limits are, and get that in place firstly, so that when you see the right opportunity, you are in a position to actually transact and do it quickly.
Yeah, I agree with that one, Nick, for sure. The agility of the transaction is very important. And with the disruption of people working from home, the banks are not immune to that. They're also working from home. So there's a little bit of disjointedness happening in regards to that, which slows things down. On top of that, you've got, a new lending landscape. They got very tight on things. They're looking at different industries and how those people would be affected by the coronavirus and moving ahead. So there's plenty of obstacles in your way. way. But for those who are agile with their finance, have got it, organized, and I'm telling you now, guys, it's going to probably take double the time it would normally take. If you got some money there, then you can just go and find some properties that have, as Nick and Tom mentioned, those solid principles behind them, location, parking, and the ability to have a variety of uses. Because we mentioned the word agile in regards to being able to jump on deals. I think we also have to be agile and adaptable in this new world, and it's something that we've all been reminded of. Wouldn't you agree, guys?
Absolutely, Rosie.
Yeah, look, it's changed. The parameters in the game has changed significantly, but with that also comes opportunity. And look, I concur with Tom. I've read all the worst case scenario reports and some of the pundits saying that the commercial, office leasing market is dead and office space is dead. I think it's a long way from that. And even if I just take my commercial leasing hat off for a moment, some of the feedback we've had from people who've been working from home is it's not for everybody. If you haven't got a private workspace to work in, or you're sharing it with the kids, it's not for everyone. And some people really like to have the separation of workspace. When I go to work, I'm at work, and when I come home, I'm at home. And they also miss the interaction with their colleagues. So that's not to say that workspace layouts may not change, so more sort of hot desking and sort of flexible spaces for people to come and go. But I think that office space is here to stay, and it'll be here for a while yet.
Yeah, I agree, mate. I do enjoy working from home, but I also like having an office to go to as well for that interaction, and having a boardroom for appointments and meetings and those sort of things. So, yeah, I think we still need both. But as we all are learning, it's good to be adaptable. It's good to be agile, and everyone will be looking at their business practices and working out what's the best way forward to them, that's for sure. So thank you very much, Nick Lane from Knight Frank and Tom Haigh from Capital Property Newcastle, for joining us today. Nick, how do we get in contact with you moving forward?
Mate, pretty easy. The mobile's usually switched on most of the time. So either call me directly on 0428 910 591, or the office here at 168 Parry Street on 49205700. Thanks, guys. Really, really enjoyed the chat. I've been waiting for my VIP pass for the Access All Agent. So nice to get in the room with you guys. It's great.
Mate, it was great. I even rolled out the red carpet just in front of me so I could soak that up. Well, once again, thanks so much. A bundle of gold in those conversations today, guys, and looking forward to the next one, that's for sure. Bye for now.
Thanks, Rosie. Thanks, Nick.